You need to be crafting that avatar for your ideal buyer, just like you would for any other business function. Like, who is your ideal customer? And when you're rehabbing this house, that needs to be who you're rehabbing it for. If you're just rehabbing for the sake of, oh, the kitchen's dated, the bathroom's gross, we're just going to flip it. You're missing the mark. Like, you're missing the strategy required to maximize the return on what you're doing. So welcome back to ReturnOnDesign. I am very excited today to talk to you about a critical component that most investors tend to overlook, and that is why you need to know your exit strategy before you really start planning anything for a property.
And by exit strategy, it's what are you doing, especially for those who are newer to the investment side, but what are you doing with the property? Are you selling it? Are you holding it? What is your end goal?
So most investors, I should say, only focused on the numbers aspect of investing. And they're focused on volume and just anything they can get, they'll buy. And if they, especially the wholesalers, they think any deal is a deal, and it's just not true.
Well, it may be a deal, but it may not be everybody's deal.
Right. But it also may not be a deal if they haven't properly evaluated the property. Because a good wholesaler is going to be able to give you, an analysis based upon different exit strategies. And most of them don't have the knowledge to do it, or they're not taking the time required to actually evaluate the property in that regard.
And by evaluating the property, you're talking about what? The location, the renovations, actual value, but there are so many things that go into that. What's that after repaired value?
Right. Like if you're not strategizing through the lens of what's the goal in mind from an exit standpoint, then you're not hedging your risk appropriately. So if all you're looking at is, okay, the potential of this property could be, $250 and it's going to require $50,000 in renovation. Okay, that's like the starting point.
Yep.
But you've got to dig deeper into the demographics of markets, the potential, that specific neighborhood, even down to the neighborhood level. What type of people are living here? Why do we have more renters? Do we have more homeowners? What are the school districts like? What are the job scenarios close by? And if you're only looking at the numbers, although your numbers still might be right, you may not be properly accounting for what are the actual days on market. How long are you going to hold this property if you're planning on selling it?
Yeah, I mean, if I've got a property that's I could potentially sell for $250, but it takes me, 6-7 months to sell it, versus the house that may be $200,000, but I can sell it in a month and a half because that's what the market's doing. That $200,000 house might actually be the better deal.
Yeah, and knowing like your end buyer, or let's just say end goal. So scenario one is like you're rehabbing and selling this property, and knowing that demographic buyer, like you need to be crafting that avatar for your ideal buyer, just like you would for any other business function. Like, who is your ideal customer? And when you're rehabbing this house, that needs to be who you're rehabbing it for. If you're just rehabbing for the sake of, oh, the kitchen's dated, the bathroom's gross, we're just going to flip it. You're missing the mark. Like, you're missing the strategy required to maximize the return on what you're doing. Versus if you're coming in and you're like, well, I know the demographic of this neighborhood are young families. And what's important to young families? Okay, how are they living in this space? And that's how you begin to renovate, design, and allocate your funds with strategy. A young family might desire a bigger backyard, so you need to consider that in your budget. Or a young family might appreciate more of an open concept, versus if you have a neighborhood that's, primarily elderly, like over 60, let's say. Their needs are different, and you have to know that before you start allocating funds through the renovation, because they may not want that big backyard. They may want a low maintenance, I sit out here to watch the birds eat and that's it. And if you're going into a rehab and you haven't defined that ideal customer based off of specific metrics for that neighborhood even, then I propose like you're missing it. You are missing a level of margin it's like low-hanging fruit.
Yeah, you've got to know who you're kind of marketing to for that property, what the neighborhood is asking for, and the demographics surrounding it. And then that is also all going to help tie in where you're going, where your budget's spent, and how much budget.
Exactly. So when a wholesaler comes to you and they say, hey, I got a deal, I got it under contract, asking $250, needs $65,000 of renovation, and it's going to sell for $325. You're like, okay, what does that really mean?
Yeah.
If I'm only looking at numbers, like, okay, great. Potential, yeah, but what's your risk?
How long is it taking to move this? How long has it been on the market?
What type of buyers are here?
How much due diligence have you actually already done to tell me what that reno budget's going to be? Because there's a lot of them that I'm looking at it through pictures. They have no clue.
No idea. And it also, I would even take it a layer deeper, that by knowing the market research, the demographics, can actually help you define the exit strategy. So let's say you've found a property and it's a great deal. Like the sellers are motivated. The house, has potential to be of greater value, but you're not sure. Like, should I hold it? Should I sell it? Should I wholesale it? I'm not sure. Well, you can go through the process of refining the market, and that can help point you to what is the best option.
Yeah. And I mean, a lot of times we actually just evaluate the deals through multiple avenues. There are some deals that we've looked at that I could hold it and I could rent this out. It'd be a great rental, but I could also sell it and do pretty well. And so I actually have room to play. And depending on what circumstances happen throughout the build for us or for a client, we can shift and we have flexibility on what our exit strategy becomes.
Yes. And it also positions you to pivot better as an investor. If you're coming in and you're evaluating, okay, scenario A, we hold. Scenario B, we sell. Scenario C, we, wholesale, whatever it is. If you're analyzing every scenario and you say, okay, plan A is our first choice, then if something happens and you run into an unexpected expenditure or whatever the case might be, maybe the market starts to shift really quickly, you can pivot. You can pivot along the way. It's not ideal, but again, you're informing yourself of all of your options and you're making the best choice for the best potential outcome.
With that, like when you're thinking about exit, what are some mistakes that you've seen where somebody's paying attention to the wrong factors around what their exit strategy needs to be or what they think it will be?
I can say that a lot of people are just not doing in-depth analysis, and they're back to what we've talked about so many times before. They don't know enough about what things really cost. And so a lot of times people are just turning down deals because they don't understand it actually is a deal, because they're looking at it through the lens of a more narrow-minded, like, oh, that's not for me, or, oh, that roof's going to blow my budget, or, oh, the square footage, I know it's going to cost 3 times as much to paint it as you're saying it, or so just some things we've heard. When in reality, you can get a better grip on certain things and have more fluid movement in your budget just by refining what actually has to be done. And if you don't really know, even if you think about exit strategy aside, okay, you got to know more about the market. It cannot just be a broad general oversight and expect to really maximize and set yourself apart as an investor in the space. Because even if you go to a big metropolitan area, you're going to have almost like little mini cities within that metropolitan where these neighborhoods are going to function totally different than a different neighborhood. So you can't just use a blanket market, days on market across the whole city. Like, you've got to dial down and refine it. And I think when people lack to take the effort to really do that, they're missing out. Like they're actually walking away from deals, or they're coming in blind and just gutting things that don't need to be gutted, totally renovating, spending way too much money, and
blowing their deal out that way.
Yeah. A prime example of how this happens is like, if you don't know what's coming in that market, that's another big way to miss opportunity. So if you're not within the local up and up, if you will, or you're not investing in like, oh, there's going to be a massive hotel built, let's say, in downtown. Okay, well, we know that there's a development plan being orchestrated by the city. And if you are unaware of the next 3 years of market potential, like you could be missing out on something that seems mediocre right now. But if you know the forecast, if you know the future of what the plans are for this area, it could be a great deal. And that's a great way to find, hidden deals.
Yeah, having an understanding of what's going on in the area. That's why we talk about locations, knowing your location, knowing your market, what is going on. And the demographics surrounding it, that plays such a key factor into understanding what may be a deal and what may not be, and how sometimes investing in an area where you're not familiar, it makes it harder to invest in some of those.
Right. Which also goes back to what we talked about on the last show of collaboration is key.
Mm-hmm.
You've got to be collaborating with people who there's overlap in what they do and what you do and how it benefits you, and just networking in general. Like we should be networking with other investors. We should be networking with realtors. And this is how you find out what's happening, what's developing, what's to come, where's the potential, what area should I be looking at that maybe other people are not looking at?
Yeah.
What do I see that they don't? And then the more you can refine that, you begin to have a niche. You begin to have something that other people are overlooking. That's where that low-hanging fruit is.
But you also, by collaborating with those other groups, you open doors for multiple exit strategies, because I may know this market here really well, but this subset of investing within the market, that's not my niche. Oh, but I do know an investor that, hey, here's the numbers, here's the real deal, and I can help them get in, but they're also going to know my niche and my understandings, so they can help send me a deal too. And we grow our communities and we grow our working relationships, so that, again, like we've talked about before, as I win, you win, and we build some teams that can do some great things. If I'm only focused on right here, right in front of me, I have the potential to miss some other amazing opportunities and deals that could be in front of me.
Yeah.
Or miss out even on having some of them brought to me.
Which is exactly why, like, you have to have the exit strategy in mind before you really start doing anything. And you've got to take the time required during your due diligence to refine it down to make sure your exit strategy is the most profitable thing. And if it's not, you got to be willing to pivot to, okay, first define what is the most profitable exit strategy for this potential property. And that needs to be your guide. Is it the best for me? Is it something I should, reassign to somebody else? Or is it just not going to make sense as a deal?
But also be willing to have that secondary exit too, because as we've experienced it, we've gone into properties where it's like, oh, I'm going to hold this and I'm going to rent it, and that's my exit strategy. But then as we're going through, it's like, you know what? Things in the market have shifted a little bit. This is actually going to be better for me to fix and sell.
Yeah. And we've had conversations specifically around that with people. If, we are renovating the property with that in mind. And sometimes people come in and they're like, oh, I'm just going to rent it, so I'm just going to keep it as simple as possible. But if you do have to sell it, well, now what are you going to do? Yeah. So having that pivot function already in there is very beneficial.
Yeah. Okay. So like when we decided to pivot and go from a rental to buying, you want to touch on some of the things that we that were happening that we evaluated as to why we needed to make that decision?
Primary factor for that was the amount of liquidity that was going to be tied up for us at that specific time. It just wasn't the best allocation of assets. And secondly, there was just a lot of volatility in the employment market in that specific area. So, things can shift very quickly. That property ended up taking a little bit longer to renovate than originally anticipated. And there was a big enough shift in the market from a buyer to seller position that it made the most sense for us to follow that next strategy of, we would rather list this, get that liquidity back and working in a different way. And that's what ultimately drove us in the decision of going with that second exit strategy. But had we not had that as an option initially, we could have pinholed ourselves to having not got the property up to market standards. So even if you're, planning to hold it for a year or two, you need to be renovating it with the fact in mind of I still need to be renovating it to be competitive in this space. Yeah. Because it's also going to get you higher rent numbers. You're going to have more quality tenants. That's going to affect your tenant ratio, your deposit. I mean, there's a lot of factors that go into that too. I am not, especially as a designer, I am not an advocate for like cheap rentals. If it's your asset as an investor, like you should take pride in that. Don't just go with the cheapest thing you can go with to just collect a rent and expect that to have longevity and be fruitful. Over time, you're going to probably have bigger turnover. Yeah, you'll have that bigger turnover. And it's not a very wise, long strategy. And cheaper materials
you're replacing more often. So are you really saving anything?
Yeah.
As we move out and kind of sum this up a little bit, what would you say are three, goals or three main topics, points that when you're evaluating a property, what do you need to have in mind?
I mean, once you secure the contract, you need to, dive deep into not just due diligence of like physical condition of the house, but you need to be diving deep, like connect with a realtor if you're not working with one, or do your own market research. What are the days on market, and refine it all the way down to that neighborhood and who's living over there. Like, who is the ideal demographic? Is it young families? Is it college students? Is it, empty nesters? Like, whatever it is, you need to be able to refine it because their expectations of lifestyle and what they are looking for in a property are going to vastly be different.
Yeah.
And that is going to give you a base point of where to start. So now that you've assessed, okay, what's the physical condition? Like, what is it actually going to cost to fix all of these problems? Then you go into, well, what's the marketability of this neighborhood? How quickly are houses moving over here? And then we go into a layer of, okay, well, who's actually buying? I know what it's going to cost to fix. I know how quickly or slowly things are moving on the market, but who wants to live here? And what do those people really want? And then you begin to bridge it all together. Like, okay, well, if they're a young couple, a young family, their needs are what my focus is on my rehab.
Yeah.
So does everything actually have to be repaired? Or what does my buyer expect to be repaired? What is this market demanding to be repaired? And that's how you begin to, apply your resources to the best and really have enough strategy to hedge the risk that's going to be involved of having the property. And it's gonna help define like clarity and actually having a plan versus just only looking at it from a numbers perspective and not having enough depth for anyone to really grab hold of and say, okay, this is actually going to make sense for me to do, and I'm willing to invest in this property.
Yeah, and then lastly, knowing like what is your actual exit strategy or exit strategies.
Yes, agree.
Am I going to hold it? Am I going to sell it? These also factor into how you're making your decisions on going forward in securing the property, what you're investing in the property, and what you're ultimately going to do. You have to know that up front so that you can plan accordingly throughout the process.
And also, all of that will help you then say, okay, is my contract price still my price?
Mm-hmm.
Do I need to come down 25,000? Am I like, you're honing in on that to really make sure you're not overspending to begin with.
Yeah.
I mean, at face value, it can seem like, oh my gosh, that's way too much work. I don't have time for that. But it's really about training yourself on how to evaluate the project to make sure that you are maximizing your return and you're putting yourself in a position where you can pivot quickly.
Well, kind of like we talked about in a previous episode, failing to plan is planning to fail.
Right.
If I don't have an idea of where I'm trying to go and have, optionality in it a little bit, then I'm setting myself up to fail.
Yeah. No goal in sight. And you're also setting yourself up to fail a team because you're not going to have a real blueprint, a plan for people to understand, like, what are we doing?
Yeah.
What is the goal? What is the expectation? That matters. So I hope that everyone is feeling like, okay, I can approach my investments with a little bit more strategy, forethought, and actually improve how much money I'm keeping in my pocket at the end of the day. And position yourself to be much more competitive in the market and build that credibility that's going to help fuel your success in your space. But if you like what you've heard, make sure
follow along with us. Subscribe, send us your story, send us your question. We'd love to hear back from you, the listener, and see what topics we may be able to help you guys with.
Yes, we would love to dissect some of your investment projects and break down the full picture. And that would just be such a good clarifying conversation to have. So until next time, thanks for joining.